So you can actually look up the 13F filings for Bill Gates' holdings. The two that I look at are the Bill and Melinda Gates Foundation, the 13F on that, as well as Cascade Investment. You can get the information directly from the SEC, or there's a website called Whale Wisdom. You can get a high-level view of what they've bought, what they've sold. And it turns out, it looks like Bill Gates has been a net seller of the overall market, especially if you look at the Bill and Melinda Gates Foundation 13F. He has been selling a lot of stocks right now. And yeah, it's pretty eye-opening how much has been sold. So if I take a look right now, he liquidated 10% of his Berkshire Hathaway holdings. He liquidated 50% of Apple, Amazon, completely out of Uber, and rightfully so. He owns a lot of these shares of these companies, and the market has been strong. Dips have been getting bought, and if he wants to offload, now might not be the worst time. Now, this doesn't necessarily mean sell-off is imminent, but it looks like, at least through the Bill and Melinda Gates Foundation, he's been converting a lot to cash. He's completely out of Alibaba. There's a couple of other real estate holding companies he's invested in that he's more or less gotten out of. But, you know, it goes to show you that it's possible that he thinks the market is a bit toppy. Not necessarily the case. Personally, if you look at the tape of this last week, the market looks super strong. If you look at the S&P 500, it cracked 4,000, and even on Friday, despite the market being closed, the S&P futures actually kept going higher based on unemployment data, ADP jobs numbers, and all those things coming out. So the market's still looking strong. You know, that doesn't mean it can't crash within a week, 2 weeks, or whatever. But at this present moment, the tape is pretty strong, so I guess we'll see. If the big-time investors like, you know, Bill Gates is selling and Warren Buffett really hasn't really been buying anything, it kind of goes to show you what they're thinking about the overall market. I'd keep that in mind because if you recall what happened last March, that sell-off that basically knocked off like 27, 28% of the market happened in essentially 3 weeks. So that sell-off could happen like that, just as aggressively. You might not even need much of a catalyst for that to happen. Things are valued very heavily. So that's a big thing I kind of want to talk about, which, you know, the activity of Bill Gates, I think, is very important. It kind of makes you think the market's a bit toppy. Once again, it doesn't mean a sell-off is imminent. Bill Gates has so many holdings. He needs a very strong market to liquidate into. He probably doesn't care that he might not be getting necessarily the best prices. If we waited a month, the market might be stronger. But now's a good time for someone with his size to get rid of, because the market is capable of absorbing his shares easily. Well, I want to go into the stocks that I'm watching for this upcoming week or the next 2 weeks, honestly. And there isn't really much on the earnings calendar. We'll get to that last. Even the IPO calendar seems not so great for this upcoming week. Nothing that I'm really looking into. I hope you guys picked up some Coursera, or not necessarily picked up, but traded Coursera. The tape was amazing on Coursera for the IPO this past week. Anyway, let's go into what I'm looking at this week. I'm looking at ticker Billy, or BILI is the ticker. It's a video game manufacturer, and ever since it broke above 100, it's been pretty strong tape. I'd really pay attention to the charts. Look like it could continue. It was at $150 a share a few months back. It's at $111 a share now. Once again, we don't have that much insight. It is a Chinese company. So, you know, always my recommendation with Chinese companies is, if you have to buy stock, go in with very small size. You never know. Always remember, Luckin Coffee declared fraud. That's always possible with some of these companies. So keep that in mind. So add that to the Chinese watch list from last week. If the tape on that's looking strong, I would stay focused on that. The other thing I want to talk about is Tilray. I didn't mention it, I don't think, the last 2 weeks, But their merger with the other major weed manufacturer, APHA, is set to still happen on April 15th. That merger could potentially boost the asset prices on both. And APHA might be the better buy. If maybe even just split it down the middle, allocate some money to Tilray, allocate some money to APHA. Having said that, this is not a trade for the faint of heart. I do see a potential that both of these stock prices are cut in half, but I also see a very good potential that the stock prices can double, and a better potential for that. So it is a higher risk trade, and it's not like a day trade or anything that I have. It's a position that I put on. Just keep in mind, this is a very volatile position, and one that I would really recommend if you think you can afford the potential downside risks, one that I would look at. And the other thing I kind of want to point out with Tilray before I stop talking about weed stocks or the weed space is the ridiculous amount of options buying that's occurring for April 15th. There seems to be a huge amount of implied volatility for the April 15th contract at $40 a share. Tilray closed on Friday a little bit, I think a little bit above 23 or a little bit under $23 a share. No, $22.34. But it seems as if the options market is pricing in a potential move to $40 a share. So in my opinion, it is worth the gamble, but keep in mind, the gamble does have some downside risk. This is a trade that might take some time to play out, but I do expect it to play out within the next 2 weeks to 1 month. A lot of options, call options buying based on this merger. I'm still holding on to Palantir. If it shoots up this week to like 27, I'll reduce my exposure a little bit, but this is a long-term play for me. If it drops, I'm probably going to be buying the dip. So I did actually buy the dip this week, and I took it off what I purchased around $21 and some change this week, around $23 a share. But I'm trying to maintain a position on Palantir at all times. It's probably one of my very few large trades that I have on at this moment. So NEO, I hope you guys bought the dip in NEO, and PDD. I'm actually, I have half as much exposure to NEO now. I sold a lot of it at $42 a share. I would just be cognizant, a lot of EVs might be overpriced. XPEV, you guys can look at that too. I just switch on and off between NEO and XPEV. They're both essentially going to trade very similarly. In fact, they trade very similarly to Tesla. Keep all those tickers on your watch list. PDD, same thing. I've temporarily took off JD from my watch list, and like Alibaba and stuff like that. I think PDD is a mover that is worth paying attention to. It's got a lot of Wall Street upgrades, so something I would still pay attention. So two newer names that I haven't really talked about too much. Penn, which is a gambling name similar to DraftKings. Still, I'll take a look at DraftKings as well. I haven't talked about it in a little while. But the gambling names seem to have some strong momentum. With Penn, I actually bought the dip in Penn. I've already sold it, and that's because I made easy money. But I still see the potential that Penn can continue to go higher from here. I just wanted to give my full disclosure. I'm out of the name, but I think the tape is actually still holding pretty strong. I don't think it's too late to get into Penn. And Chewy. Chewy is one that has had quite a bit of a dip. It's getting some Wall Street analyst upgrades and stuff like that. I don't necessarily buy the analyst upgrades that much, but it's something that you definitely do want to pay attention to. So look at Chewy. So Lululemon had a bit of a sell-off last week. It could be a buy longer term, but I think it's worth potentially looking at the tape to trade it both ways. The sell-off in Lululemon might not be over, might be worth a short. Wall Street really loves this name though, so don't go ham trying to short this name, because I definitely could see it getting bought back up. But it's a name I think you should look at to trade both ways. Riot seems to have a lot of good news announced. They've increased their hash rate, their ability to process Bitcoin transactions. on their network. I think it went up by 460%. Having said that, Bitcoin is struggling to break out above 60,000. It's gotten very close. In fact, as I'm recording this, it's at 57,588, dropping from 59,000 earlier in the morning. So yeah, I would just be cognizant on Riot and Mara, those two names, that they're heavily correlated to the price of Bitcoin. I think I actually prefer trading these over Bitcoin, to be honest with you. They're great trades. And Riot also seems to have gotten an upgrade to about $64 a share. Speed run now. MongoDB, Roku. The Wall Street seems to be buying the dips. MongoDB went from 250 at one point, close to 300 now. So a lot of buying going on in MongoDB, MDB, and Roku, ROKU. That stock is getting bought on the dip. It's up 10% from its recent drop already. QuantumScape, QS is a ticker. Over Plug Power or Fuel Cell, I might be leaning towards buying QuantumScape now. Plug, with their accounting error, I don't know if it's going to recover anytime soon. And Fuel Cells, they seem to be stuck in a range. It doesn't mean it can't break out. QuantumScape, I'm very curious to see how it plays out this week. I want you guys to watch it. Every time it's dropped below like $44 a share, there seems to be aggressive buying on QuantumScape. And Micron is breaking out above $92 a share. Pay attention to that. So this upcoming week, I am watching Applied Materials, AMAT. And I'm watching Paychex earnings on Tuesday. Other than that, I don't really have any earnings other than Paychex on Tuesday. So Applied Materials, that's a new name. Not a new name for a lot of day traders. I don't think I mentioned it much. It's breaking out. Maybe join it, try to get a few handles, and then get the fuck out. Okay. No major IPOs this coming week that I'm really paying attention to. But Coursera IPO actually performed very well. The actual tape looked very strong, seemed to have some buying demand, and then right after it dropped off like a rock. But overall, the performance was not terrible. This is something you have to watch very, very carefully and cut your losses immediately if the tape goes against you, because we have very little information about it. But yeah, I mean, in that one day, it went from like $40 a share up to 50, like 55 almost, 53.74, and then it dropped back down to 45.78. And that's what you want to see as a trader, some massive, massive movement, right? 40 to like $55 a share, that's an insane move in one day. So keep that in mind. Pay attention to Coursera. AMC, GameStop, those names are still in play for trades. You have to pick your directions as the tape moves. But the reason I'm mentioning them is the tape movement is jaw-dropping for names like that. Anyway, that's all I have for this week. If there's one thing you should get out of this video, is Tilray, especially Tilray. If there's a name that you guys are trading that I'm not mentioning, leave it in the comment section below. I'll be happy to take a look at it. I'm always up for new names, but the nice part about trading similar kind of names is you really learn how to read the tape or the actual charts of those individual tickers over time. You get better at trading individual names. Anyway, that's it for me this week. I hope you guys picked up some new names to watch. Other than that, best of luck this week. The market still seems like it's breaking out. Just be cognizant that last time we started selling off, it happened just like that, and the change was jaw-dropping. So for the time being, let's stay positive and keep trading.
I just want the money.